ladies and gentlemen, we are back. It's been a long time since we have done a live, but of course, FOMC, what more do you want? This is it, ladies and gentlemen. We know for a fact that the Federal Reserve is coming in with a standard nothing burger FOMC. Rate cuts are pretty much going to be exactly as they are. Bets are coming in that they think they could get a rate cut in September. But your data is not showing that. The problem that we've got, ladies and gentlemen, is consumer confidence came in higher. And what does that tell you? Well, Monday's reading shows that people are absorbing high interest rates. Now, pending home sales came in relatively lower, but what does that mean? Well, it means people are just sat on the sidelines. They're not committing to mortgages because the rates are too high. And that's why Donald Trump is livid. He wants Powell to cut the rates so that you can start the economy and get it moving. But the problem is the economy is moving and it's doing fine. GDP came in higher today, 3%. Problem is for every dollar that the US earns, it owes 122% on top. But the economy is sustaining itself. Now remember, Jerome Powell and the gang have this mandated target of 2% inflation, and they're going to do that by making sure that they maintain price stability and, of course, a lavishing labor market. Well, we kind of got a surprise reading on the ADP non-farm employment change today, so that showed us that there is a lot of people going into work. So what are we waiting for tonight, ladies and gentlemen? Well, it's going to be an interesting one. Word on the street is there could be a surprise cut. I don't think so, though. Nah. Very unlikely that we're going to get a surprise cut, ladies and gentlemen. But what we're going to do is we're going to pace out this evening, because if we just get a nothing burger again and Powell doesn't give us anything, then there's no point in even wasting time trying to work out if he's going to give us anything. He's going to lay it out straight up, and he's going to verify that the cuts are either going to come in September, 25 basis points is what they're looking for. But the bigger the cut, the more the market will welcome that. But we know that historically that when the Federal Reserve cuts, it does induce a pullback, usually between anything from 35% to around 51% drawdown. That means the markets can correct up to 51%. So if you go back historically and look at where previous Fed pivots come into play, you can appreciate that with the stocks at all-time highs, and more than 51% of them are in that region. Not more than 51%, but there is a lot of stocks that are currently succeeding their all-time highs. Who's buying? Who's buying? It's clearly retail. So what we're going to do, we're going to break it all down, ladies and gentlemen. We'll be looking forward to listening to Powell. And of course, what I'm going to do in this live stream, there's going to be the actual FOMC federal statement that comes out. And then, of course, the actual funds rate itself. That will be at 7 p.m. UK time, which will be 2 p.m. Eastern Standard, which will be in the next, where we at? In the next 25 minutes. But more importantly, half an hour after that will be the press conference. And that's what everybody's looking for. They want to know if Powell is going to come across as hawkish or is he going to come across as dovish. So we're going to wait and see what happens there. But without further ado, ladies and gentlemen, let's get with the program and break down exactly what has been going on. Welcome, ladies and gentlemen. Who the hell hasn't put down that they haven't liked the stream? I'm running a poll right now and it shows no. 21% of these votes are saying no. That is shocking, man. You know what? Hats off to you, man. You were clean. You were straight with it. Transparent. I'm not liking the stream. Anyways, Treasuries fall on strong economic data. Let's just have a look at that data to put things into perspective, ladies and gentlemen. Here we go. So this week is already a wild week for data, all right? Going into this evening, if we get good news tonight, we could get bad news from the Japanese. But I don't think the Japanese are going to give us bad news. Given that now that there is a tariff on them, they're not going to be enjoying the idea that they have to pay out more. But more importantly, they have to convert yen into dollars just to keep up with it. So it's unlikely that they're going to be increasing their interest rates. I mean, in my honest opinion, if the Bank of Japan were to increase their interest rates, that would be a stab at Donald Trump, because then that would trigger the carry trade. What do I mean by that? Quite frankly, if the Japanese yen is moving up against the US dollar, then of course that means investors are selling dollars going into yen. But if it's going down against the US dollar, it means investors are actually using yen, selling it, borrowing it, selling it, converting it over to dollars. What did I say to you all? I've been telling you all, do not sleep on the dollar. The dollar is going up. And ladies and gentlemen, we are heading into some significant areas right now. And we have a very interesting zone around the 99.57 region. So again, if the dollar succeeds above 100, that would be saving grace for Donald Trump. Going over into the bonds market to understand their reaction with regards to the news. You can see the bonds are just fluctuating around the 99.05 region, but that's only because of the data that's come out. Jolt's job openings came out, 7.44 million. Bit of a dodgy reading in my honest opinion, ladies and gentlemen, because it started off on the week as a reading of 7.49 is what they projected. Then they revised it to 7.51 on the forecast, and then it came in at 7.44. What a joke. But consumer confidence pretty much puts it into perspective. Why? Tells you that people are absorbing everything. Seems like they are retaining money. They're able to absorb high interest rates. They're not having to go into financial products. I mean, JP Morgan, Wells Fargo, Bank of America, they've all done really well with their earnings call. So it looks like everything is working perfectly normal. Why would you even think that the bull market is not here or it can't sustain itself? But the data is giving us more of a reasons to believe that the Federal Reserve is going to be more reluctant to cut the rates. Look at the bets. The bets are coming into play that 40% are expecting rates to stay at 4.25, 4.5%. All right. They're coming in with a 57.9% bet that they think it's going to go down to 4.4%, 4.25%. The true rate itself in principle is around 4.33%. But based off the way the data is presenting itself, it's not giving us anything other than keeping the rates as they are. Or, like Jamie Dimon put, there could be a possibility that they could increase the interest rate. So you've got to ask yourself the question. They're not cutting, but they're not giving us the idea ever that they would increase. But if they're not going to cut, but the data is suggesting everything is fine, then what happens? To control expansion, what do they have to do? They have to increase the interest rates, because then you get too much of an economic expansion. You need to control that because inflation could effectively go back up again. Maybe Dimon has got a point. Maybe he has a point, ladies and gentlemen. GDP comes in at 3%. That's good news for the US dollar, hence why the dollar has made a move to the upside. But the ADP at 104,000, that was a complete wild reading right there, which tells me that on Friday, we have the non-farm payrolls coming out, and that could be an absolute surprise. I think it's going to be a wonderful figure to show that the labor market is doing wonderful. That will hands down solidify the idea that the Fed ain't going to be cutting even in September. But we've got to wait and see, ladies and gentlemen. Now, going into it, federal funds is in focus, and they are waiting to see how Powell thinks the economy is going to be in the future, because it's all going to be on tariffs. I mean, we've just had recently another tariff come out with India, 25%, I think it is, that Trump's put out on India. So he's not stopping. But remember, guys, when it comes to these tariffs, all of those tariffs involve transacting on the US dollar. So every nation, whether it's euro, whether it's yen, whether it's pound, whether it's Swiss, whatever it is, they're all transacting on the US dollar. That is naturally going to be fueling the dollar to make a move to the upside, which is why you're seeing dollar right now making significant gains. Equally, the good news is that the stock market is also making a move to the upside. Quickly going over to the stock market, you can see it's starting to climb up right there. And when I say to you that the rally itself is being sustained, I'm making reference to this story right here. In front of you is the NASDAQ, and it shows the composite index volume. So that's every single one of the stocks under the NASDAQ. Volume on the bottom right here, ladies and gentlemen, is what you want to be seeing at all-time highs. Before, we never had it, but now we're starting to see the volume coming into play at all-time highs. Now, the day is trading positive, and it says it's up 0.1%, and volume is up nearly 64%. So that looks like we could have ourselves another accumulation day. And the accumulation day itself means that institutional investors are buying. But what is smart money doing? Smart money is selling. They're selling, ladies and gentlemen. And what we've got down here is dumb money is effectively at a peak. Well, not a peak, but you get the idea. It's at an extreme. Now, when the Fed pivot comes, guys, that is my prediction that once the Fed pivots, the market is going to correct, in my honest opinion. It's been going up for what? For the wrong reasons. Inflation is up. US deficit is increasing, and it's not stopped increasing. What more do you want? It's every reason for the market to start pulling back. It's going through too much of an expansion. And the economy itself is expanding under the wrong circumstances. So that's where you've got to really say to yourself, as prices are going up, they're not done until the Fed pivot comes into play. That's my honest opinion. Are we good with everything? Are we lagging? Surely we can't be lagging. Refresh the stream. Restart, stream breaking up. Stream. No, I'm getting good internet here. Everything is fine from my end. Are we good, ladies and gentlemen? Let me know if we are good. Video is lagging. Stream is terrible. Oh, no. No, my internet is fine. Really? Wait there. Can't be. Can't be that. It cannot be that. I've got perf. I'm not running no Wi-Fi, nothing. Here we go. Internet looks fine to me. Yeah. Ladies and gentlemen, I've got a download of 250. Okay. Sorry. A download of 706 and an upload of 200. I don't understand why it's not working. No. Yeah, I'm not on Wi-Fi. Lags out every 5 and 6 seconds. I got my my live stream's been tariffed too. Right, okay. No, that's so bad. That's dead. It's got nothing to do with paying for the internet provider. That is so dead. That is so dead. Yeah, I'm guessing it is on my end. Yeah, you're lagging. It's fine now. What is it? Are you guys lagging out?